Marriott International took nearly a century to accumulate 1.5 million hotel rooms worldwide. Hilton took over 100 years to cross 1 million. Airbnb? They crossed 8 million listings in less than 2 decades and worth more than nearly every hotel chain on Earth. In 2024 alone, more than $82 billion in bookings moved through its platform. It is one of the largest hospitality providers on the planet. Millions of travelers book stays through its network every single night. Yet if you check Airbnb's corporate asset ledger, you'll find 0 properties, 0 hotel buildings, 0 bed linens, and 0 cleaning staff. They don't build hotels, they don't buy real estate, they don't employ housekeepers. So how did a software company that owns no real estate scale faster than the entire global hotel industry combined and build a business generating billions in pure cash flow? In 2008, 3 roommates in San Francisco couldn't cover their rent. They noticed a design conference in town had sold out every hotel room nearby. So they laid out 3 air mattresses in their own apartment and rented them to conference attendees who had nowhere else to stay. They called it Air Bed and Breakfast. The mechanism they built from that idea never changed. A host lists space they already have. A guest books it. Airbnb never touches the property. It simply sits in the middle of the transaction and takes a cut. Across every booking on the platform, that works out to an effective take rate of about 13.5%, collected automatically on every transaction without Airbnb ever owning, building, or maintaining a single property. 3 air mattresses became a fee collected on $82 billion of bookings a year without building a single hotel. To scale a traditional hotel chain, you need massive physical capital. Building a hotel requires buying expensive downtown real estate, securing hundreds of millions in debt, and navigating construction permits. Once open, you face fixed operational costs, staffing, maintenance, and utility bills, whether your rooms are full or empty. In tech terms, traditional hospitality is capital-intensive and low-margin. In 2008, Airbnb bypassed this entire capital bottleneck by adopting an asset-light marketplace model. Instead of building rooms, Airbnb built the marketplace that unlocks existing underutilized space, spare bedrooms, vacation homes, and secondary properties. Corporate Airbnb takes on 0 real estate debt, 0 mortgage liability, and 0 store-level operating costs. The home buyer pays the mortgage, the host pays for the furniture, the host handles the cleaning. By offloading physical capital to millions of independent hosts, Airbnb unlocked near infinite scalability. Adding 100,000 new rooms to Marriott takes years and billions of dollars. Adding 100,000 rooms to Airbnb takes a few thousand people downloading an app. Because Airbnb operates as a digital middleman rather than a property owner, its financial structure is fundamentally different from traditional hospitality. When a traditional hotel chain experiences a downturn, its fixed costs, mortgages, property leases, site staff, remain high, crushing its profit margins. When Airbnb experiences a market shift, its operational costs remain flat. Airbnb's capital expenditures are exceptionally low compared to traditional hotel chains, as it does not need to invest heavily in physical property development or maintenance. Its primary costs are software engineering, brand marketing, trust and safety algorithms, and payment processing. The median cost to construct a single hotel room in the US runs about $213,000, according to industry survey data. Full-service or luxury properties cost far more. Airbnb currently has more than 5.5 million active hosts on its platform. Building equivalent physical inventory from scratch at median construction cost would run past $1 trillion, far more than the platform has ever generated in total bookings in any single year. The properties Airbnb lists already existed. Someone else had already paid to build them, furnish them, and maintain them, often years before Airbnb was even a company. Airbnb never needed to solve the hardest, most expensive part of the hospitality business. It only needed to connect people to space that already existed, sitting underused. The genius of Airbnb isn't that they created a better room. It's that they realized in the modern platform economy, controlling the digital marketplace that coordinates access to a service is vastly more valuable and profitable than owning the physical assets themselves. This flexibility becomes obvious during major events, when demand spikes far beyond anything a city's hotels were ever built to handle. For example, in the 2026 World Cup, Airbnb recruited more than 150,000 first-time hosts across North America in the months leading up to the tournament, homes that had never been available to rent before, suddenly entering the market. A hotel chain cannot do this. Building new rooms takes years of planning and permitting. Airbnb's supply can expand within weeks, simply by giving existing homeowners a reason to list. They didn't build a better hotel. They built a toll booth over millions of existing ones